We're seeing some heavy selling come about in this market here. The S&P 500 was down 1.3%. You had the NASDAQ down a whopping 2%. Is that really going to change the whole outlook of the market after the huge run-up that we had over the last 3 weeks? Not by itself, it doesn't, okay? There's still a lot of work that the bears need to do to really change the tide of this market, and the bulls still have the momentum on their side. However, that could change this week with Meta earnings on Wednesday, and then the big whammy with FOMC the same day coming out at 2 p.m. followed by the Fed presser. Then on Wednesday, you had the trifecta of earnings. You got Apple, you got Amazon, you got Google, all reporting earnings that afternoon. That's going to create a huge lift or blow to the tech market and to the tech stocks in general as those earnings are released. So big news coming out, particularly on Wednesday and Thursday, and how it affects the market going forward. What should we be looking at on the stocks? Let's go ahead and look at that right now. But first, make sure to click the join button down below so that you can get all of my stock market research that I provide for members only on this YouTube channel each and every day. That's going to include multiple videos, plus updates on the S&P 500 and the overall market, as well as the big tech stocks and some of the different stocks that I'm looking at each and every day and weekly watch lists. Really good stuff to check out. So click the join button down below. And for now, let's get to the charts. First up, we got SPY. Now, we've been talking about this one for a long time. We got the declining trend line. We've broken that, right? Maybe I don't need to draw it anymore, but we got to see what happens on this pullback here. We had one big pullback today, 1.3%, like I said. What does it do when it pulls back to this declining trend line? Is that going to be important? I'm not sure yet, but what I think is going to be even more important is how it corresponds with this rising trend line off of the October lows. That's going to be the more critical placement for this. Now you also have, when you zoom in a little bit more, you have a 20, a 50, and you have the 200-day moving averages all converging together. That could also provide another extra layer of support as well before it gets to this purple line. And then when you go back even further, check this one out. Holy cow. Talk about some resistance that we saw price get rejected at here. This resistance still remains pretty strong, and this goes all the way back to mid-2021. And look, we tested it in late November, we tested it again in December, and now we tested it on Friday, the January that we're in right now, and it rejected price once again. So it needs to get back above that level. That's going to be important. But for now, we want to see, one, does this support level, this old trend line that it was previously selling off on each and every time, does that hold? If that doesn't hold on for a bounce, then this rising trend line off of the October lows definitely comes into play. On the Qs, here we go again. We got the decline trend line. What happened here? We've broken above it. You also have, you could say that it's a double or a triple bottom. Let's just call it a double bottom for now. Some days I call it a double. Some days I call it a triple. The reason why is you got this little bottom right here, but sometimes I just say, all one bottom, okay? Either way, it's the same thing. Then you have this breakout level. Well, guess what? We broke out above it on Friday, and then we gave it back today. So there's a little bit of a head fake going on there. That's not the best thing that you want to see in this market. You also have a break of this white line here, which happens to be the 200-day moving average. That's another thing you don't really want to see in this market here. We're breaking back below it. You can see it's had its struggles with the 200-day moving average in the past when you go back to what we saw in late March, early April, right there. And then again, it had a rough time with it in January and February. So for about 4 months, 4 different calendar months, it struggled to break through that 200-day moving average. Hadn't had a real test of it until till last week, and when it finally tested it, it struggled with it. So the Qs, it can't hold this breakout level, which I was a little bit questioning whether it might, because it had run so far, so fast off of the lows without any stop that it's hard to sustain that momentum. I mean, you got discretionary, it's up like 13% so far this year. You got tech over 10% so far, and we're just in January still. And you can't really sustain that kind of a momentum throughout the entire calendar year. So it would make sense for us to have some kind of pullback, and we just haven't seen it yet until today. Looking at the 10-year, we don't talk about this one too much, but the Fed is seeing financial conditions loosen up again as much as it has since August and September of last year, where they came out during the Jackson Hole speech in August, and he really just tampered down on expectations for the market and any potential for a rate decrease in the future. And he may have to do that again at this FOMC statement, because they're doing the same exact thing again, thinking that the Fed has to start pivoting and start to reverse cuts later this year. I don't think they're going to do that. I think that's some foolhardy assumptions that's being made, but a lot of people are buying into that, and they're buying stocks as a result. This rising trend line, though, off of the March lows, we're testing it right now. We tested it before now. We tested it back in August. That's essentially where you had that Jackson Hole moment, and we bounced and we went way back up. Now we're going into the FOMC statement. We're testing it again. I could easily see where this is the point in time where you finally get the bounce off of what he says at the FOMC meeting where they released the statement on Wednesday, and then the presser later that afternoon. Look at the VIX. This decline trend line may be starting to crack a little bit here, guys. It's starting to break just a little bit to the upside here, just a little bit here. But you can see this has been a really, really stubborn layer of resistance that it just can't seem to break through. But it did today. It closed just above it. So that was important. And then finally, what I wanted to show you was the T2108. We're really oversold, man. 72%, 73%. Where did we get in November? We got to about 73, 74%. And then, of course, August was really crazy. That was like all the way up to 81%. We're way up there. And this is like the long-term picture of it. This, we can go way back. But you can see, you start getting into the 70s, you're getting very, very overbought in the market in general. So, lesson from all of this, I'd be very concerned about the FOMC statement coming up on Wednesday. Do I necessarily trust the Fed to do the right thing? No, I don't, because they are the bastion of disappointment. They're the people that you never know what they're really going to say. They love to so much make people happy. They like to make the market happy with them. But in the end, will the Paul Volcker side of Jay Powell come out, or will it be another helicopter Ben Bernanke moment where we just keep printing the money, we keep giving hope for the market to believe that we don't need to keep raising rates, and as a result send the stock market soaring even higher than where it's at today? If you enjoyed this video, let me know down in the comments what you're thinking about FOMC statement. Also, let me know what you're thinking about these tech companies and their reported earnings that are scheduled for later this week. I want to hear all about it. It's good to be back. I was a little bit sick last week, so happy to be doing these videos again. Thank you guys, and God bless.